One of the interesting things, Mahima, is I really want to get to the bottom of what influences the rates on GICs, because what happened in December was that the Bank of Canada continued to raise their benchmark rate. But yet, what I noticed was that at the end of November, some of the top rates for GICs, in fact, went down. Maybe you can just help us understand what influences GIC rates.
Yeah, I mean, it's a fairly complicated process in that GIC rates can vary by term.
Mm-hmm.
Um, and you're right, the way to think about it is as a spread to the Government of Canada bond curve. Um, Now, the spreads can vary depending on competition in the market, but keeping that aside, generally in an upward sloping rate environment, the 5 year GIC, for example, will have a higher rate than the 1 year GIC. Um, but vice versa, in an inverted yield curve, which we're observing currently, you'll see an opposite trend. What happened specifically in November is the market in that spread to Government of Canada's was already pricing in speculation or what they thought was going to happen with the benchmark rate.
Mm-hmm.
And so when the Government of Canada came out with the projections, or sorry, with the change in the benchmark rate, if it's less than the speculation that was already priced in, which was the case in this scenario, you see a decrease in rates. So it's
Interesting.
somewhat reactive in
Yeah.
that the expectations are already priced into the spread.
I gotcha. So that's exactly what I noticed. I noticed that the return on a 5 year GIC, or 3 or 4 year GIC at least, is sometimes lower than a 1 year GIC. So that has to do with the inversion of the yield curve, right? So I guess
Exactly. Yeah.
down the road, is it safe to say that people are essentially expecting lower rates in general? That's why you're maybe getting paid a higher rate today, lower rate for a longer term?
Exactly. So in the future, the
Yeah.
expectation is that the interest rates will decrease. And so
Yeah.
the market doesn't want to be locked into those higher interest rates for a longer period of time. And so the 1 year GIC is actually demanding a higher interest rate than the
Gotcha.
3 to 4 year.
Is there typically any difference in returns when you're seeking a GIC for a non-registered versus registered account?
They're usually the same, but
Okay.
I would really encourage people to shop around because depending on what an issuer is, uh, what their deposit objectives are, there can be promotions out there,
Hmm.
and there can be different mechanisms in market. So it's definitely worth doing that shopping. And this is going to be a plug for EQ Bank, but
Yeah, yeah, because traditionally you guys have been at the upper end of the curve when it comes to GIC rates. That's also what kind of piqued my interest. So,
yeah, and that's exactly it. Like I think there's a lot of alternatives to the big banks that people should consider. The online banks, credit unions. EQ Bank is a great option there because our rates are generally more competitive. They actually always are more competitive than what you can get through direct to consumer channels on with the big banks. And I think
hmm.
the other piece that's really interesting is most of our GICs for Equitable Bank, which is the parent bank of EQ Bank, is actually
Hmm.
distributed to through third party financial advisors.
Hmm.
And Equitable, like many other um, financial institutions, has to pay a commission to those financial advisors for selling the GIC. And that commission is usually 25 basis points. So in EQ Bank, because there is no middleman or financial advisor, we actually take that commission and add it back to the rate that the consumer is getting. And so you have that extra advantage of higher yields on EQ Bank.